Welcome and thanks for joining us at EMII.com. I'm Caitlin Sisney with your hedge fund headlines. Today is Monday, March 3rd, 2008. The new attitude by foreign hedge funds doing business in Japan is to kill them with kindness. A year in which activist hedge fund proposals in their portfolio companies failed, they're taking a kinder, gentler approach, according to the Financial Times. Kengo Nishiyama, a strategist at Nomura, said, quote, "They realized it was not an effective method, so they are focusing on trying to convince their shareholders to support them. That means," he said, instead of trying to take over the company, they are offering alternatives to the management strategy and showing that they have the same goal of raising corporate value. Moving to hedge fund headlines and risk analysis, difficulties in evaluating some fund portfolios may expose members of hedge fund boards to greater legal risk. Robert Kelly, managing partner at Barron's Mead Insurance Brokers, says that HF directors are personally responsible when they sign off on annual reports that involve complex and illiquid credit securities. He said nobody has a cast iron idea how to value these assets. Usually the fund administrator does the valuing, and that person may call on an independent valuation service, but that alone would not necessarily protect the fund from a lawsuit. And shifting to the legal arena, MF Global has reportedly lost $141.5 million and is pointing the finger of blame at Evan Dooley, a veteran commodities trader. The firm accuses Dooley of making a large amount of secretive wheat trades. MF Global CEO Kevin Davis said in a conference call last week, quote, "This is a very disappointing situation for us," as the company's stock price tumbled more than 27%, according to the New York Times. Dooley, who's been in the field for almost 20 years, bought some 15,000 wheat futures, about 10% of the available contracts, in what has been called an unauthorized trade. The alleged action has been referred to as much a smaller version of what happened last month at Societe Generale, which recorded losses in the billions from the alleged secretive trades by Jerome Carville. The Times reports that Dooley is no longer working at MF Global. And in a quick look at what is making hedge fund headlines in Canada, about two-thirds of private equity players in the U.S. and Canada believe the credit crisis north of the border will last through 2008, but only 1 in 10 expect it to extend into next year. The firm surveyed found that institutional investors were almost unanimous in believing that growth in private equity transactions will continue to outpace any M&A growth in Canada this year, according to Blake, Cassels, and Graydon. Half of respondents say current credit conditions have resulted in changes in approach to material adverse change clauses and reverse break fees. Tighter credit conditions also have prompted funds to demonstrate greater willingness to participate to increase equity participation. And that rounds out today's hedge fund headlines. Thanks for joining us on EMII.com. For more details on these stories and much more, click on our hedge fund section and read the latest developments.